Hey guys, Sarah Berry CPA, Texarkana, Texas here, and today my tax tip video is about farms. So I get this question quite often. I get several questions often about farms. The most popular one is probably, hey, is a farm a good tax write-off? The second one is, what's the minimum amount of cows I have to have a farm and deduct all my farm expenses? Or how many acres do I have to have in order to have a farm so I can write off my side-by-side? So these are all questions that I get, and they are good questions, and I am going to dive off into a farm. What is a farm according to the IRS? What is deductible? What is not? And give some examples, okay? So right off the bat, I want to tell you that a farm is a good tax write-off, and you can deduct a loss that offsets other income and therefore increases your refund if it is a legitimate farm according to the IRS. So what means a legitimate farm? It means that you have a profit motive. You have a plan to make money. You may not be making money yet, but you have a plan to make money. Okay? So that is the most important thing. Now, let me give you an example. So I grew up on a chicken farm. We had laying houses. We had 10,000 hens and 1,000 roosters, and a new flock every year. We would go into these chicken houses and pick up these eggs, sometimes 3 times per day, and ship them off to Tyson or Hudson or whoever that we were producing for, and we would get paid based upon the hatch rate. So that is a legitimate business according to the IRS. That is a legitimate farm, and we could deduct all the farm expenses associated with that farm. We did not have to show a net income. You could have a net loss, but the IRS still, it was easy to prove. We weren't doing this for pleasurable purposes. It is a legitimate business. We were in the business to make money. Now, on the flip side of that, I'm married out on my own and got 4 kids. We have about 20 to 25 chickens in our backyard in a chicken coop. These chickens, we have no intention of ever making money off of them. They are pets. We eat the eggs. So it is strictly for our enjoyment. We do not plan to sell the chickens. We do not sell the eggs. We do not hatch them and sell the pullets. Therefore, I cannot deduct the cost of the chickens. I can't deduct the chicken feed. I can't deduct the chicken coop. I can't deduct my utilities. I can't deduct a side-by-side for purposes of having a few chickens in my backyard, okay? So I think you kind of get that idea here as far as, according to the IRS, what is a legitimate farm. So I get the question quite often of, do I have to have a minimum number of acres or a minimum number of cows? No, you don't. You just have to be able to prove that you are in it to make money. In fact, I got a question yesterday from a client who said, hey, I've got 80 acres and I'm getting ready to buy cows. And so I need to prepare my land to purchase cows, but I'm probably not going to purchase the cows before December. I'm probably going to purchase them in 2021. Can I go ahead and deduct the cost of purchasing the tractor and the bush hog to get the land ready? Doing the dirt work to get the land ready. Maybe he's going to dig a pond because he needs a water source for his cattle. Can he deduct that? He's got to have fences before he buys the cows and puts them on the land. Yes, those are all legitimate farm expenses, and they can be deducted. Even before you're making money and before you have that expense of purchasing the cattle, there's still business expenses, and they can be deducted, so you need to keep track of them, okay? Okay, so what is a deductible farm expense? Deductible farm expenses include anything associated with your farm. Purchases of animals, their feed, their minerals, vet bills, their care, anything to take care of these animals, okay? Chemicals, purchase of seed, fertilizers, plants, tools and equipment such as rakes, shovels, tractors, tillers. Is a side-by-side a deduction? I get that question a lot. I think people, they just like to have a side-by-side and it makes them feel better to know they can deduct it for their taxes. A purchase of a side-by-side is a deduction if you're using it in the farm for a legitimate reason, such as you purchase a side-by-side to be able to go through and check your cows. Yes, that would be a deduction. And any implements or improvements to this equipment. You've got bush hogs, loaders, your front end loaders, your discs, things to work in the pasture, eventually a cutter, a hay cutter, a rake, a baler, those sorts of things. Obviously, they are deductions. Land improvements, fences, dirt works, ponds. There again, pond is a deduction as a water source for the cows. Now, stocking the pond for fish is not a deduction for a cattle farm, but stocking the pond for fish would be a deduction if you are a fish farmer, right? So it all comes into play is this a legitimate, an ordinary, and necessary business expense according to the IRS? That's the question it would come down to in the event of an audit, okay? Other deductions, gravel, culverts, buildings are deductible. Keep in mind that those are spread out over a longer period of time, whereas most of this other stuff can be fully deducted in the year that you're out the money. But buildings are spread out over a longer period of time. Barns and shops are deductions, but spread out over 39 years. Insurances, liability insurance, insurance on the automobiles, the farm automobiles, insurance on the cattle, maybe you've got drought insurance and flood insurance, things like that. Those are deductions. Farm automobile expenses, you can either do mileage or actual expenses. Rent on land, maybe you're renting some pasture land, maybe you're renting equipment instead of purchasing it. Those are deductions. Repairs and maintenance on your equipment, and if you're using actual expenses for your automobiles, then you can also deduct the repairs and maintenance on the automobile. If you're using mileage for your farm auto expense, then you just get mileage, not the repairs on your vehicle. Interest paid. Let's say you get a loan to go purchase cattle, purchase a farm, then that interest paid on that loan is a deduction. Property taxes are a deduction on the farm property, okay? The property taxes on your home would be deductible in a different place on your tax return than the property taxes on the pasture land, okay? But normally it's better to deduct it as a farm expense instead of a personal itemized deduction if you can, okay? Farm labor. Telephone, internet, advertising, if you're advertising farm products or farm events or farm services, then the advertising associated with that would be a deduction. Commissions at sale barns, utilities that can be traced directly to farm expenses, farm activities, or utilities that can be reasonably allocated to farm expenses. So if you've got a separate meter that runs your barn, your shop, maybe you've got a well that's designated just for your farm, your cattle, then that would be fully 100% deductible. But let's say you have one meter and it includes your house. That's personal, not deductible. But it also includes the shop, the barn, and the well. So you could reasonably allocate a portion of that electric bill to personal, not deductible, and to farm, deductible. So maybe it's 50-50 use. Maybe it's 75% personal, 25% business. So you can deduct a portion of it. Farm-related meals, you're not going to have much of that unless you are truly deep into the farming expenses. You know, when you're paying, you have labor to come and help you. Maybe you work cows, and you take your guys out to eat, your laborers out to eat, things like that. Then you would have some farm-related meals expense. That's 50% deductible. This is what I tell my clients. So when in doubt, keep receipts, keep good records. Tell me about it at tax return preparation time, and I will let you know for sure at that time. Okay, so now let's talk about what is not deductible. I think we covered a lot of this in the intro, but what is not deductible is anything that is expenses for your pet. Now see this cute little pig over here? So my employees at my CPA firm bought me this cute little miniature pot-bellied pig last year for Christmas. And we named him Wilbur, of course. This is Wilbur. We love Wilbur. We do not intend on slaughtering Wilbur and eating him for Christmas. We do not intend on selling him, breeding him, or selling his babies. So Wilbur and the pen for Wilbur and the feed for Wilbur is not a deduction. Now, this is my son feeding my chickens that are my pet chickens. So the money I pay him, if I did pay him, to go out and do the chores every day to feed the chickens, that's not deductible. because I'm not in the business of a chicken farmer. Now, if I was in the business of being a chicken farmer and I was making money off of this, then I could deduct the labor paying him to work and feed the chickens every day and pick up those eggs, which, by the way, would be a great tax-saving strategy to pay my dependent child to work in my business. But watch my other YouTube video for that. We had baby goats at one point in time. Never going to have them again because they're a nuisance, but they were not deductible. All expenses associated with them were not deductible because they were for pleasure. We didn't breed them. We didn't sell them. And here's some adorable pictures of our chickens. But I think you get the point here as far as what is not deductible. Pet expenses. Land. Land is never a deduction. Now, if you purchase some land and there are some improvements on that land, such as shop, fences, improved pasture land, things like that, then we can take that land and we can break it down to those items that are deductible, but the raw land itself is never a deduction. So sometimes that's hard to explain to clients. Hey, I purchased 80 acres that I'm going to use as a cattle farm. Well, if it's raw land and land only, it's not a deduction. If there's any other things, additions and improvements, we can deduct those. You may only get partial deductions for some of your expenses. We talked about that. If your internet, telephone, automobile, property taxes, things like that are some personal utilities, some personal, and some business. You don't deduct the personal expenses. You don't deduct the personal portion. You do deduct the farm, the business portion, okay? These pictures up here are the cows we just purchased. So even though we've had a farm for several years, we'd had goats and chickens and pigs, and we have ducks, we can't deduct those expenses. But now that we have purchased cattle, we will be able to deduct the expenses associated with cattle because we are putting quite a bit of money into that, and with the hopes and the business plan and the documentation that we are going to continue to grow this herd and make money in the long run. Now, before I wrap this up, I did want to mention a few things. So, farm taxes, when you get into a more sophisticated farm, there are special rules for farmers, income averaging, farmers' payroll taxes are different. But for a small farm starting off, which is really what this video is aimed at, there are a couple things I want you to note. There are agricultural sales tax exemptions available in most states, both in Texas and Arkansas in our area, that exempts you from paying sales tax on agriculture expenses of some kinds. Purchases of equipment that would normally be subject to sales tax, a lot of times you can get that sales tax exempt if you have an agricultural exemption certificate. Purchases of feed and supplies, implements and things like that, a lot of times will be exempt from sales tax if you have a farm ID number. So if you're a client of mine and you want to know some more details on this, reach out to me. I'll be happy to point you in the right direction or get that number for you. Also, I want to say, check with your local USDA office for farmers assistance. There are things like drought insurance, flood insurance, conservation programs available, like for fencing. They will reimburse you for fencing expenses. They'll reimburse you for water conservation, putting in water supply systems and things like that. So don't forget about that. That's a great way to have the federal government reimburse you for improvements that you're doing to your land. I'm going to wrap up the video now. Thank you so much for watching.